Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. This will be the first of the regular midweek videos that I'm hoping to do, which will be much shorter than our normal Sunday videos, but hopefully it'll be more relevant and more important and more current as we go through the week. And if I can do more than one, obviously I'll try and do that. I hope you'll like these videos, and I hope you'll let me know in the comments below what you think of them. Please remember the normal disclaimer. All my videos are for educational purposes only. Nothing should be taken as financial advice. Please do your wider research before making any investment decisions. I don't have a crystal ball. All I'm doing is interpreting the charts and giving you my perspective. And I hope that it will add value to your wider research as a result of all that. Okay, so without further ado, let's get cracking. What I want to do is to start with the weekly chart as per usual, just to give you the overall bigger picture. And I've marked out in this picture about 4 levels here which are absolutely critical to what's going on currently. I've also got this bump and run trend line here because it gives you an overall feel of what's happening in the market. So basically what we've got is this run-in phase here, then we've got the bump, we broke out, and as is classical for a bump and run pattern, we came back and found support back on this trend line here, and we were really good to go. And once we broke this neckline here, it looked like we're going to go into a very bullish phase here, which we did up to the $69,000 mark. However, the market turned here, and since then what we've done is we've basically cascaded right down to these key levels here at the $40,000 mark. So basically this is where we are. This $40,000 mark is really the absolute key critical level that we've got here in this region. And what happens in the next few weeks and months will be determined whether we either break to the lower side of the 40,000 or we make a run towards the upper side. So as I've said many times, the weekly chart time frame is showing really a very good bullish pattern here still. We haven't made a lower low here, and we've made the higher highs here. So the overall bullish trend is still intact until we break this 40,000, and the bull run will be broken and the structure will be basically negated if we break this 28,800 mark. So this is where we're at on the aggregate side. So the general sentiment out there is really subdued. The volume is very steady. Very negative sentiment. People are very frustrated because people who are holding have actually seen their portfolios go down by between 50 and 70%, depending on whether you hold Bitcoin or whether you hold the Bitcoin miners. And what we've had is 2 months of a steady decline. And as you can see quite clearly, the trend is down with more further pressure maybe to come towards the $40,000 mark here. So that is the worry, that we could actually go right down to the wire at 40,000 again. The main question I'd like to always ask is, are we seeing sellers being exhausted here? Because until they're exhausted, only then can we expect a push up and certainly an upward rally, because that is really well overdue now. So if we have a look at the shorter term time frame here, so if we focus on the daily chart, the only bullishness I can see here currently is that we had this dragonfly doji candle which came all the way to this level here at the 39,600, and since then, as you can see, we haven't really closed well below the body of this candle here until yesterday, and currently we're trying to get back above the 42,300 mark here, which corresponds with this flash crash that we had exactly on the 4th of December. So this is where we're at. So 42,300, I've given you that many times in the last few weeks, that this is where we've got to really get above, first of all, and we're really struggling to get above there. But on the other hand, we haven't really come to meet this dragonfly doji level here, which is at 39,600. So it may well be that we come back and retest that. Really, the levels to look out for, the first level, the first sign of upturn will be when we actually get above the 44,500, which is actually the top of this wick here. So what we've done is we've come down here, bottomed out so far here, come up to this level, which was a 61.8 level, and now creating some kind of a double bottom pattern. Hopefully this will create a higher low on this side. So if we can make a run up to above this level here at 44,500 to maybe, let's say, 45,500, that will create a higher high and a higher low. So this is really the critical level, 45,500, 46,000 level. Once we break above the 46,000, then I think we're good to go to the upside. But until then, there is obviously bearishness still overtaking the market. So if we do the Fibonacci retracement to see exactly what's happened from this previous high, you can see quite clearly that we've topped out here at the 44,500 level on the 61.8. And on the reverse of this, it's actually quite interesting that if you take from the bottom here to that point at 44,500, we're right on this 61.8 here as well. So we're hopefully going to be bouncing off these levels to come and retest this 44,500 mark here. Once we get above that, that'll be the first sign that we may have created a higher low here with a further potential of a higher high here. So keep looking out for that. These are the real critical levels, 44,500. As you can see, 61.8, we've come back down to the 61.8 and we're trying to go back up to retest the 44,500 there. So in essence, what we've really got to do here is hold this $40,000 mark support level first of all. That is the critical level. If we fall through there, then 30,000 is definitely on the cards and in a very short space of time at that. And if we can hold the 40,000 support level, we must really get above this $42,300 mark to match this wick here. That'll bring more buyers into the market to retest this 44,500 level. And should we manage to get above this level, I'm expecting a little bit of a pullback from here, but if we do get above that, then this is the real critical level here at 45,500. And once we flip above that, the 46 will be the critical level to basically use a bounce to go to the upside. Something else very important to mention here is that we've already had this head and shoulders pattern that developed here. And that should have really broken down to the downside as the head and shoulders pattern are bearish. However, we broke to the upside. And since then, we've now created a second head and shoulders pattern here. And once again, we find ourselves at this juncture here. So the question is, are we going to break to the upside or the downside? So again, we've got the second head and shoulders pattern developed here, and we're waiting for direction from the market. The main thing to consider with a head and shoulders pattern is that the right shoulder, which is this one here, is really the critical one at 52,000, because should we get above that, that'll negate this head and shoulders pattern here. Now some would say this is not really head and shoulders because we only had one wick down here. There wasn't really much price action. Well, let's say it is a head and shoulders pattern and we expect it to play out like it would, then obviously it would come back down to this level here. However, should we manage to get above the 52,000, then this will no longer be a head and shoulders pattern and the implications that would imply. So keep a lookout for this. This is very important. The right shoulder, so the current price is 42,100 at the moment. So we are looking like we're going to be challenging this 42,300. So look out for that for today and we'll see where it goes to. Hopefully in the next video, we'll have a little bit more clarification as to which way the market wants to go. Okay, so I hope you enjoyed that shorter video with more focus on the shorter term timeframes and the key levels that to look out for in the shorter term. And if you found value in the video, then please do remember to like and subscribe and to turn on the notification. If you've got any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.